All right, guys. Well, thank you very much for attending. We're going to be talking derivatives, and I think some of you will be surprised that the derivatives we're talking about are not just Bitcoin and Ethereum. These guys are actually practitioners that do that trading. They came from traditional finance, and as you'll hear from as they introduce themselves, you'll hear that a lot of it was commodity trading, futures, commodity options, and so forth. So you'll hear about those backgrounds, and then you'll hear about how they're trading, what they're trading now in those derivative exchanges, those DeFi derivative exchanges. So it's not just about Binance, FTX, and so forth, or the CME. This is way beyond that and how big it's grown, but I don't want to steal their thunder. I am Jon Najarian. I've been a trader for 40 years. I came into this business because I was lucky enough to not be drafted by the NFL and instead was a free agent and went to the Chicago Bears, where Mike Singletary held out on his contract. Thank you. One Bear fan in the whole audience. Mike held out on his contract. I got to play 4 games, got cut as soon as Mike was part of the Bears team, and then he went to the Hall of Fame instead of me, according to my mom. I traded down on the Chicago Board Option Exchange for 25 years. I was a member of the Pacific Exchange, the PHLX, the New York Stock Exchange, and the CME and Board of Trade. So I've kind of traded a lot, just like these guys. They're the younger generation, though. And sold my firm to Citadel, to Ken Griffith, which is a long, fun story. We'll do it another time. And then built up a firm called Trade Monster that was stock, options, futures, but not crypto. Sold that to E-Trade in 2016. My brother and I were the primary founders and funders of that, and we sold it for $750 million. I haven't pissed all of that away yet, but I was lucky enough in 2016 then to start aggressively getting into crypto. And I think what you guys are going to hear from the panel is that there are many ways to trade with less risk, although you can, because of the leverage that you can employ, trade with a lot more risk if that's your game. That's not my game anymore, because I'm not here to get rich. I'm here to hold on to what I've got and then grow it for my family and so forth. But these guys are here to get rich. And I think, but they're disciplined, which, as you'll hear from them, the biggest thing about trading is discipline. You got to cut losses. You've got to be able to identify how much risk you are taking. And if you can do those 2 things, you can win at this game. You have to understand the product, which will be part of what they're going to talk about right now. So I'm going to let each of them introduce themselves and give you a little background, and then we'll get into the trading side of it. So please, Benoit, open it up for us.
Hi. Thanks so much for the introduction.
Wait.
Obviously, great background story. I don't know if I'll do as good, but I'll try. I'm Benoit Bosque. I work for GSR as Global Head of Product. I, before that, was in traditional finance. Like you mentioned, I was running crude derivative for Goldman Sachs. And I've been trading in traditional finance for over 15 years in various roles at Goldman Sachs and Barclays. And one of the guys that I was sitting next to ended up founding GSR. And so at the time, in 2013, was very early for crypto. And it wasn't necessarily obvious to anyone what that space was going to evolve in and what it was going to become. But I was always interested personally in computing and mathematics, and I was really, driven by some of the tech. I didn't quite know, and I think no one did really, when the value proposition would really transform and disrupt the space. I think that happened at the end of 2020, and that was kind of my epiphany moment, where I felt like, okay, I need to go join those guys. And I did so like slightly over a year ago, and it's just been a fantastic adventure. And I would say that, crypto really evolved over the past 13 years since the beginning of Bitcoin. In the last year and a half, those evolutions became ever more so dramatic. And what we're here to speak about really is the rise of derivatives and rise of options. And the last year, and GSR was really a pioneer. Like, we watched this from the beginning. We were the first people to trade a variance swap on Bitcoin. We started pitching accumulator. We went to China wearing suits and tried to look like the adults in the room, bridging traditional finance to crypto native. We were speaking to those miners, and we realized, speaking of risk management, that they didn't want something that, like what's happening in commodity market with proper hedging that helps you control your price volatility, your earnings ratio, create free cash flow. They wanted more leverage. They didn't want to sell the calls. They didn't want to buy the put. They wanted to buy more calls. and so this was just not the time. But I feel like now people have an appreciation for risk management, for what it can bring to the space, for how it could elevate crypto. And GSR, we want to be the thought leaders. We want to help educate the space, both on miner hedging, but also DeFi derivatives and all of those other instruments that we're involved in. So for me, it's been really a fantastic journey that last year and a half, being at the center as a crypto market maker, really at the center of liquidity for the space, both on spot and the derivative side, helping those projects. And a lot of our clients are token issuers, some of those protocols that we're talking about that are coming and that are trying to create those products. So we help them with the product fit, we help them with liquidity, we help the rest of the ecosystem work together. And I think, like other people on this panel, we really want to be an ecosystem player. We want to help grow the space, we want to help educate and inform. We want to be here to really
support,
make it, get to the next step.
Cool. Darius, would you mind giving us a little background on yourself, sir?
Sure, thank you. Hi, everyone. I'm Darius. I'm the founder of QCP Capital. We are a full suite cryptocurrency trading company. We do spot, options, derivatives. We also do ventures, and we've recently been doing more building and incubating in DeFi. So my own crypto journey, I started in 2016. So I was working at hedge funds at a bank back then, and I started not knowing what exactly Bitcoin was, and all I knew was that the price, the global price and the Korean price had a 60% difference. So it didn't matter what it was, do the arbitrage, make some money. Started QCP Capital in 2017. We started with a spot trading desk, got into options very early on. We invested in Deribit. In 2018, we started options. And more recently, we've been doing a lot more on options besides just exchanges and OTC in DeFi as well. And the DeFi option market has grown tremendously. And that has become the cornerstone, like John mentioned, for altcoin options as well. So the market is really, really new, actually. I mean, it's just a couple of years old. It's exploding, and definitely something worth looking at.
Cool, thank you. And Patrick, just to round it out, Patrick Baker, give us a little background how you got started, which is closer to how I got started, I guess, but please.
Are you talking about the NFL right now?
Yes.
Yeah.
He was a quarterback for the Bills.
Yeah, we played in college together, and then, both at the Bears. But no, we're also both at the Chicago Board of Options Exchange. I graduated from Miami University 2001, went up to the CBOE. And back then, I mean, as you recall, it was all open outcry. People were still in the pits, screaming bids and offers. There was no streaming quotes. All that stuff had not happened yet. And so just when I learned how to do all of that, and I finally made my way into the pit in 2002, they changed all the rules. And Citadel came in, Susquehanna. I was lucky enough to be at Group 1, which was just like these other groups, that they were committed to staying on the cutting edge of technology. And what we did was we would sit in the pits and stream quotes, and then kind of do a hybrid of the two of them. Slowly but surely learned how to do all the streaming quotes, while a lot of the older guys kind of got weeded out. And I realized then, pretty big lesson, pretty much the only lesson, which is everything's about to change. And as I realized that, I went upstairs, I was streaming quotes, and I was doing great with it, and slowly but surely decided I wanted to get into commodities. And at Group 1, we were the group that actually started the VIX, so the volatility index. So I was around such smart people that I realized you could create a product all on your own and then just see massive liquidity and massive profit and revenue. So I kind of took this idea, and I was like, I want to do structured products for commodities. which at the time was a little bit less sophisticated than the equity. So I just went across the street, went to the Board of Trade, started a structured products desk. This got acquired by StoneX. At the time, it was INTL, FC Stone. And once I got there, became head of trading, and we traded all the different commodities. It was easy to trade cotton and coffee and corn, but we would also have to trade a lot of the less liquid stuff, black sea wheat or dairy, just you name it. We had offices everywhere in the world, so we were just making markets and structured products and options and all these liquid and illiquid contracts. So, I spent a lot of time, a lot of my career has been in traditional finance. And then, I liked how Benoit was talking about the epiphany moment, because everyone has to have that. I mean, I did not want Bitcoin to work. I did not know why we had to change the rules. I was pretty happy with winning the first system of the world. Why do we have to change everything? And so I just knew, I finally had to give in, and I saw, Bitcoin's going to go higher, if nothing else, because all the institutions are getting in. I mean, that's not a very brilliant reason, but as a trader, that's why I got in. And then I was like, okay, well, it's gone up a lot. I got to sell it. And once I had bought it, I had started reading nonstop about it. And so I decided I was never going to sell it. So then I decided, okay, well, what do? I trade options. So let's go figure out how we're going to hedge myself. And at the time it was around 50,000. And so I'm like, all right, let's buy those $45,000 puts 6 months out. Those would be nice. What call do I have to sell to finance those puts? And it was the $75,000 call. And I had to look at it for a day straight, because I'd never seen anything like that. You have a 10% downside and 50% upside. You have $5,000 of downside, $25,000 of upside. At that moment, I was like, I got to start a hedge fund, I got to quit commodity trading, and I got to do everything crypto, because I have to make sure that I do this and I get in on this immediately before another day goes by. And so then that was the genesis of Sphinx, which is my hedge fund. And then from there, I obviously have to do a structured products desk, because this is what I grew in commodity land. I have to do this in cryptos. So number one, we need to be able to market structured products that are more advanced than what's out there already, or are in the cutting edge of that. So let's do that for Bitcoin. Let's do that for, brace yourself, some of the altcoins. And once we do the structured products in those, then it's actually this is what happened with us in a lot of illiquid markets. Is once you can put on a huge position on a structured product, it can finance and kind of pave the way to making it easier and easier for you to make just regular vanilla options in those markets. So I feel like that this is kind of where we're going to get, it's going to have to snowball, and is it going to be the chicken or the egg? How's it going to work out? But, I'm well aware of these two companies, and we're newer on the scene, but I wish we had been here for 4 years, but, we're just getting going with this right now, so we're really excited.
And that trade that he described, that Patrick described, folks, where he said, I'm buying the 45,000 put, Bitcoin was at 50, so he had that much downside, 10%. And he was financing that by selling a call on the $75,000 strike in the example he used. That's a collar. So he is collaring off the downside. He's paying for it. It's a zero-cost collar by selling that upside call. And as you heard, because of the mispricing, which is no other way to put it other than that, of those calls, he was able to sell those calls against his Bitcoin and buy that put for zero, no additional cash out. So he has only a 10% downside, and the stock or the Bitcoin could run to 75, and he'd be making 25,000 on the upside, and probably rolling that put up against it as it did that. So that's one example, and that's something that for years in Silicon Valley, I used to sell I can't even mention the firms, but you'd go into some of the big social media plays, I'm sure you could figure out who, and we'd say to those guys, how much money do you want? And they'd say, I don't want to sell my stock. And I'd say, you don't have to. I'll put on a zero-cost collar for you. You just pledge your stock to me. So I'd get their stock, put on a zero-cost collar, give them 20 million, 50 million bucks, because we'd loan to value 95% or something like that. And they're taking a write-off on the interest on that loan, and they've never sold the stock. They've never paid taxes. So there's a lot to that, but that's the sort of thing that's embedded in what these guys are talking about when they're talking about that. The other thing is, quickly, that you've all heard, I'm sure, about the liquidations that go on a very regular basis from just vanilla Bitcoin trading, where all of a sudden they'll say there were $8 billion in liquidations this weekend or whatever, because people were too levered up at a certain level of Bitcoin. And in particular, if they're in options, well, you can imagine how much leverage they could get. So I point out to people that if you could put on 100 to 1 or 200 to 1 leverage in Apple, it would have volatility like we see in the Bitcoin market or any of these derivatives. But you can't. It's 2 to 1 leverage for equities, and if you have portfolio margining, you can stretch that a little bit. But basically, you're talking about leverage on crack on some of these exchanges. And that's not to demonize it, but that's just to say you can really hurt yourself if you don't understand how the products work. So first of all, I'll throw it out to the whole panel and you guys jump on it, jump ball. When you see that there's an awful lot of calls or puts that are placed out there and leveraged bets, you're looking, I imagine, at those levels and saying, if this thing pierces, we're going to see a waterfall to the downside or a melt up to the upside. Do you trade derivative, when you're trading on Bitcoin and Ethereum, do you trade derivatives that way? Any of you?
Yeah, maybe I'll start. We've actually been seeing very similar patterns to what we see in traditional markets, right? Strikes and contracts with very high open interest tend to have strike gravity. So if you look at for us, you look at the DeFi options vaults, tend to have very big, punchy strikes at very in very short terms, 1 weekers, 2 weekers. We have been seeing spot prices move towards there every Friday and get stuck there, the same way you see in FX or commodities, and guys are trading the gamma and delta around those strikes. So we're seeing the kind of patterns. I would say in the general pattern is that most folks are short vol in the front end, long vol in the back end. So front end just for earning carry and the back end, just for speculation mostly, right? And I think the option market, I think, is actually creating a bit more stability rather than creating this kind of liquidity gaps, because you have market makers who ourselves, GSR, we're long tons of vol at certain strikes, and then it sort of caps and floors the price sometimes. So I think our view this year is actually a more short vol view. You have macro factors pushing capping price, and then you have guys like Terra and other projects and other treasuries that have made, that have had invested, have received investments of like $50 billion last year, and they're moving the treasury into Bitcoin. So you have a floor there as well. So a little bit different from what you said. I think it's the opposite. You actually have a nice range because of the vols in play.
I would say also to add to that 1 year ago, Bitcoin vol was 125%, Bitcoin yield were 30%. You look now, Bitcoin yield is basically zero, Bitcoin volatility is 60 to 70%. The amount of money that has percolated into the space from traditional player, from institutional player, because of those kinds of opportunity, as Patrick highlighted, those kind of mispricing, those kind of skew, because that has attracted so much capital. And we're not even talking about the private market where the raises have been astronomical. That money has made its way onto the derivative market, onto the option market. You've had much more sophisticated player getting involved. And as a result, you have lower volatility. The opportunities have now moved somewhat more into the altcoins, more into the DeFi platform that offer those kind of volatility, like option trading, potentially to retail, potentially to institutional, like some of the protocols that we mentioned, Ribbon, Friction, Theta Nuts, all of those are Zeta markets. They're out there offering ways for people to get involved, and that has made the market more efficient, which I think is essentially what you're describing. We have a market that looks a lot more like the markets we come from, like the markets you're describing in equities. And I think it is good for the adoption. As you know, derivative markets in every asset class is a magnitude larger than the spot market. This isn't the case in crypto yet, but it will be. And I think it's important to, again, educate and prepare people. This is what's happening. Those liquidations that you're describing, there's going to be less of them.
Yep.
going forward. The leverage ratio, they're going to decrease. Regulations are coming, and hopefully good regulations. You know, I think everyone here embraces good regulation. They will be good for the space. Like, this is going to normalize. This is becoming a very valid asset class from a derivative perspective as well.
Patrick?
Yeah, I mean, I echo a lot of what you all just said, but just to give it some relative, it's like, okay, so Bitcoin is 100% vol last year this time. Now it's at a 60. Ethereum, let's say, is at a 70. Some of the altcoins, like Avalanche, let's say, is like, what, 110, 120, 130. So just to give an idea of like where we're standing. And then when you talk about like some of the traditional, if you're talking about, I don't know, like if you want to talk about Apple, you're talking 25, 30, 35. If you go into the commodities and you're outside of the past 6 months, those are typically around 15 or 20%, currencies around 10%. So what those have is just massive inflows of institutions and desks that are trading those. And as we see them get into Bitcoin, what's actually happening? Well, it's pretty scary what you were talking about before. Before the institutions were really big players, just degens coming in, 10x, 100x leverage. And you, as a smart trader, you can get this cascade, because if you can get their stop losses, because what are they really doing? You can either go and buy Bitcoin at $50,000 and buy one for $50,000, or you can go and try to buy 10 Bitcoin with your $50,000 with 10x leverage. Now, what do you have a problem with? Well, if it goes to $45,000, then you've lost $5,000 10 times, which is $50,000, which means that the people that are running these exchanges aren't stupid. They're as smart as they come. They've got you stop lossed out. So if you can get that stop loss to hit, if you can get it to touch 44,999, or really probably like 45,050, then there's going to be a stop loss, and it's just going to snowball. And if you can get that snowball and you have the proper options position on, then you have a situation where you can really get this thing to crash. What the institutions do is they come in and they say, no, not so fast. We are not going to let this happen. We got some bids working. We got, there's just much more liquidity in this market now. And that's what Bitcoin is. And then you start to see, a lot of times people talk about Bitcoin, it's the future, or crypto is the future. Yeah, of course. I don't disagree with any of that. I'm very much into that. But it's also the past. It's exactly what we saw back in 1995, 1998. The options are coming. The institutions are coming more and more into the options markets. There's going to be competing exchanges. You can almost see how what took 20 years in the traditional world to do, it probably happened in 5 or 6 years in the crypto world. That's why you want to get in as soon as possible, because people are coming and they know exactly how this thing plays out. One more thing I just want to say is, we mentioned the 50,000 price, $45,000 put, $75,000 call. You do an amazing job of explaining that, so thank you. So what do you see now? You do not see that opportunity anymore. It's the most emotional market I've ever seen. It changes. And it's like Bitcoin's going to 10 million. All right, everyone's excited. Bad week. Oh, Bitcoin's going to 0. I can't believe I got into this. And so now here we are, we're kind of back, a little more hopium, but when Bitcoin is at 35,000 recently, you could just go out a month or two and you could buy the $30,000 put, or sell the $30,000 put and buy the $40,000 call at 0. So let's go through that again. And whereas before you could buy the put for $5,000 protection and then sell a call that took $25,000 of a rally before you get hit. Now you can sit here and have the protection, or to the upside of saying, I can buy 40,000, which will, it could theoretically go to infinity, or let's say 100,000, 200,000. And then to the downside, the most you can lose is 30,000. So you're selling a $30,000 put, buying a $40,000 call. And now, it's not nearly as sexy, but it's still mathematically, it makes no sense to a trader that we just decided that this whole thing just reversed just because of what Yellen or Elon Musk, or some random thing that just occurred in the macro. So I just think that it's kind of one of those things that we're still seeing, very emotional, and until the institutions truly come in, there's still a good amount of runway on this.
Yep, and the institutions are still coming in, pouring in to this market. So again, I applaud all of you guys for being here, because when the DTB, the Deutsche Terminbörse, DTB, when they decided they were going to roll out this all-electronic exchange with market makers that were the banks in Germany, there was tremendous edge, the sort of edge that Patrick described with that or the $45,000 put against 50 Bitcoin and that 25,000 to the upside, the 75,000 call. That goes away very quickly. It's already gone, as he's already described. So now the opportunity is for you guys to still be in early for this, because what these guys are about to describe next is the altcoin option market, which is blowing up right now. I mean, Darius, I don't want to steal your thunder, so I'll let you say where it was April of last year and where it is now, but tell these guys the most active coins that you trade on the alt side for options, and then all three of you, I guess perhaps in particular Patrick, about the structured products that are on these exchanges, like Theta Nuts, like what is it called? Friction again?
Friction. With a K.
Or Ribbon, or any of these. Some of these exchanges you guys haven't even heard of, but those exchanges that offer these DeFi derivatives. Darius, how big has that market grown in the last year?
Maybe before I go into that, I want to put some numbers to what Benoit was talking about.
Okay.
So, if you look at gold, the gold market, the options in terms of notionals is about 8 times the size of the spot market. If you look at crypto, the options market is less than 2% of the size of the spot market. So if you're going to say that there's going to, Bitcoin or rather crypto options is going to follow that same parallel, we're talking about an insane amount of growth, right? So we really are in still quite early days in terms of derivatives and vol markets. And also, we're talking about the vol compression that will happen as traditional guys get in. That's the biggest fear of any vol desk, right? Because we're all excited to be in vol space because you have FX like dollar India vol trading at 5%, and then you have Bitcoin trading at 60 to 100% at times. It's a huge opportunity, and you can see the private banks all salivating, just to create structured products on these. And I think we'll follow the same path eventually as the banks come in. But my point here being that, that there's huge opportunity in terms of growth of the options market and being able to structure products on crypto vol. The big innovation that we've seen in the space in the last 1 year or so was with the DeFi options vaults. So the DeFi options vaults are doing something very new, right? In traditional finance, you need intermediaries to manage non-linear risk. So if you trade options, you need to go through a bank, you need to go through a broker. There's margining and everything. But when you bring this into DeFi, you're talking about managing non-linear risk without an intermediary, purely governed by smart contracts, and that makes it very difficult, right? So the DeFi options vaults, we were championing it because we found it was extremely innovative. It's a way for market makers to get involved, for retail to get involved. Guys who would previously have very little access to trading Bitcoin, Ether options, or even altcoin options, right? They would have to onboard with a GSR or us, and they need to be an accredited investor and all that. But now you can go anonymously, no KYC, get your MetaMask, stick it into the vault, and get an institutional type product. Very little fees, and then you get your yields anywhere from 20% to 200%, depending on the volatility of the underlying. And this market has grown from last year, April, it started with Ribbon at 0, and now it's about $1 billion in TVL, and it's still growing. I mean, I was just discussing with somebody here earlier that it's a very, very simple rudimentary market. It's just 1 week vanilla puts and vanilla calls. Already it's at $1 billion. And it's a huge opportunity because as these guys start to do exotics and more structures, you see the market grow. And I mean, our view is that in 5 years, 10 years' time, personal finance, personal management of your finances is going to be on DeFi. The younger generation, I don't think they're going to put money with the banks. With the recent economic warfare in Russia, if you're Russian and you're Chinese, you have renminbi or ruble in the bank, that's not safe anymore, right? You're going to move it into DeFi, and DeFi has a full ecosystem of products available, from spot to Delta One derivatives to options, and I think that's the direction it's going to go to. So I think we are really, really early days. This is a new market. The opportunity is very, very fresh. So yeah.
That's definitely happening, and we're seeing also structured product on chains as well. But for us, we were also very early to Ribbon, also because we work again with the protocols, also on the other side, just making sure that like the technology and their token and like, you know, Ribbon doesn't, but like didn't have that at the time, but like, you know, those not just as provider of liquidity. But I do think it's very interesting what you're saying. I think the space is still, even at that scale, still relatively small. And that's why there's still some of those opportunities. You can't quite do them in size yet, but this is a way to bring in liquidity and really scale up. This is going to be like one of those like next stages in the evolution. I think what's very interesting about all the DeFi option vaults also is, as you mentioned, like it opens up really like the space to everyone who wants really to get involved. And structured products are definitely coming in. You know, we're going to see that. Like it's difficult right now to put like large size also, but I do think this is growing, this is happening, and the scale at which it's happening is the pace is just different. What took decades in equity to get from, you know, selling a strangle to getting those systematic strategies with like enhanced beta, you know, enhanced alpha, enhanced beta, you're seeing it in crypto happen within the last year. So now you have protocol like ThetaNuts that you mentioned that's doing a systematic rolling and yield enhancement that way. And everything is linked, the volatility, the yields that you're getting, and that's what's getting everyone in that space. Like that's what's so interesting at the moment. That's really the cutting edge. That's where everyone who wants to get into crypto should really study. Like the amazing thing is like all of these got created in the span of 1 year. It's very feasible to become pretty much, not an expert, but like to become really good at this, but it's much more complicated in other markets. There is room, we're still early. The time is now.
Quick example, and I'll throw it to Patrick. When I started in 1981, the Chicago Board Option Exchange was the biggest option exchange, and collectively, the 4 exchanges that there were traded 350,000 options a day. Now we do that on the opening, and we trade about 42 million option contracts a day right now. So again, for all of you in the audience that are actually listening and paying attention to what these guys are saying, this is just the beginning. And Patrick, if you could talk a little bit about some of the structured products that are out there on ThetaNuts or Ribbon or any of these, and maybe some of the altcoins that these products are written on.
Absolutely. I mean, first off, it's hard to improve. I mean, you guys nailed it on the DeFi, and that's going to be astronomical. It's ridiculous how we're just scratching the surface on DeFi. One thing that I want to go into, though, that's just like kind of a different way of looking at it is, this was another eureka moment for me. Was I was driving to meet a pretty big miner through Illinois, you know, like, and I'm driving through the cornfields, and I'm just thinking to myself, I can't believe in the past year that, like, whereas I used to, this car ride would end with a huge farmer, and I'd be explaining, okay, here are corn futures, here's a collar that you could think about, here's a structured product. I think that we do 80% of this and 10% of that, I think that you'll be very happy with hedging your downside. And then instead, of course, I end at a miner, and I see for the first time just what a mining operation looks like. And I mean, it's so obvious once you see it. You're like, oh my God, this is the exact same thing that's going on in commodities. These guys are producing Bitcoin, or they're producing Ethereum, or they're producing any types of different altcoins. And when you meet these guys, they're young, they're extremely intelligent. You realize that these guys are going to be successful no matter what. But what they don't really know that well yet is like about futures. Like some of the stuff that I take for granted, they haven't even had that education yet. Before we even talk about going on and like putting on a collar, you got to talk about the futures, which is what everything is like derived off of. Those are the derivatives of the future. And then you talk about the structured product, and you can of course explain to them, like, there's ThetaNuts, and here's DopeX, and here's Ribbon, and you know, they're kind of looking at you like, wait, I don't even know what a future is, right? So you get them educated on that, and you start to realize, again, like the huge path forward that we have of just, you know, getting to that point. Now, of course, there's some very sophisticated investors that not only understand futures and options and structured products, they basically solve the calculus on their own by hand. I mean, they're brilliant people that are out there creating the DeFi exchanges and trading on them. But a lot of the people that are out there that do want to trade the alts and want to trade DeFi just want to do it in a even more of a centralized way. So like we still even have that before everything will be on the DeFi, like in terms of people that want to feel like they're getting their hand held a little bit before they put their MetaMask into it and they risk their entire mining operation, to trade something on some of those DeFi exchanges. So I think both of those things have a ton of range to go. What I'm focusing on right now is going to like those miners and explaining to them, like let's not try to go to the very end of the story. Let's talk about the futures. Let's talk about some collars. Let's talk about maybe buying a put spread and selling a call right now in this environment because you're not getting as much upside. And then let's talk about some of the structures that I know that everybody loves in the commodity world, which are accumulators, stackers, and hedgers is what we're calling them. So like we look at them on a day-to-day basis, finding ways to, in Bitcoin, if it's at 50,000, buying it at 40,000 every day, and figuring out ways to structure a product that isn't even on a DeFi exchange. And then eventually, of course, the DeFi exchanges are fascinating because it's truly an exchange that it's not like the CME whatsoever. There's no one, you don't know how exactly is behind that curtain. And that they've figured out a way to have an automated market maker. And I mean, we could make this thing a 2-hour panel, like trying to go into that. And we probably at some point need to start making more of those. But it's fascinating the things that they've come up with in this world, which are perpetual futures, everlasting options, all kinds of different yield instruments, all done completely automated on a DeFi exchange. So I don't know if I feel like I might confuse it more if I try to explain it more without going into it.
I think one thing that I found very interesting is that the altcoin options markets really grew out of DeFi rather than CeFi. Because I mean, GSI ourselves, we've been trading options for a long time, and it was mostly Bitcoin, Ether. And I think both of us, we would go to the projects that we invested in or projects that we incubated, and we would pitch them, you have this XYZ token, and would you like to buy some puts, or would you like to create an options market on your token? It will help you. It will help the spot market. It will grow your financial ecosystem. No one gives a shit, right? You don't give a shit. And then the DeFi options vaults come up, and you tell them, would you like to put XYZ token on a vault, DeFi? And they're like, okay, here, take my money. And that's how the altcoin option market grew, and it grew really much in the last 1 year through the vault. So I think where CeFi failed to create altcoin vault, DeFi has succeeded. I found it very interesting because it's a very native kind of origination.
Just quickly,
It's working.
I think one thing that I would add is nowadays we're getting a lot of requests for Solana options, Luna options, AVAX options. This is coming up. This is happening.
There's ApeCoin options as well. Yeah?
That's right,
no comment.
ApeCoin.
No comment, maybe.
Maybe.
But yeah, and I think education for the miners still, they're early compared to their commodities counterparts, compared to their traditional finance. But really, you have also the traditional hedge funds, and you want to offer all of those products to this mix of retail and institutional investors at different level. You want to allow them to really penetrate the space.
And that comes back to something, just to reiterate, it's again, we're calling it DeFi, and that's fascinating, to hear that anecdote, that experience. But it's the structured products often that we found in the commodity land as well, that if something was illiquid, we would get the whole thing going with the actual structured products or a yield instrument that actually then gave us, as market makers, our positions, and we would be looking at it just the same way as we did if we had been trading options the whole time, and gives us that we have now an axe to grind, and we need to sell some options or we need to buy some options, and our markets get a lot tighter.
Maybe this is a bit of an East-West thing. I'm not sure whether you guys, I'm sure, experienced this as well. Back then, a couple of years ago, people always wondered who are the guys buying options or selling options, or rather buying hedges, right? Is it structured products? And it's always like, is it the miners? But the truth is, if you go to the Chinese miners and you tell them you want to buy some hedges, structured products to earn some yield, they're like, nah, don't give a shit. It's more like how much can I leverage and how much longer can I go with the stash I already have. And I think that still perpetuates in Asia. And I think it's good for the vol guys because it keeps the vol higher. Because I mean, in the West, I think a lot of the guys will come in with vol selling, and then you see the kind of compression that we see. But in Asia, in Korea, and China, I think you see a lot of demand for extra leverage, and I think that's what's keeping that's what's keeping the vol curve buoyant. I mean, it's scary for vol market makers. You know, for example, 2 weeks ago, 3 weeks ago for FOMC, you saw Bitcoin vol drop from 100% to 60% in one day, 40% vol move in one day. And it's really scary, right? And if it hits towards 40, 30, or the vol gets like shit, you know, it's a deja vu. Is it going back to the single digit vol? But you know, I think in the crypto space, you still have this very, very good, healthy, speculative demand for options, and I think, you know, that dynamic works very well.
So we're out of time, but please, guys, either collectively or shout them out. What are the number one or the top 5 altcoins that are trading on these alt DeFi exchanges quickly before we
Solana, AVEX, I mean, Beno said it, Solana, AVEX, probably Aave,
Luna.
Luna, of course, yeah.
Terra? No?
Luna's Terra.
Okay,
Yes, Terra.
gotcha.
Yeah, like Near is really making you know, also as a strong rally. Listen, we trade $5 billion a day of spot, and we have one of the largest alt Vega exposure on the street by nature of our business. And I just, like, as Darius and Patrick says, like, you know, it's still early. The breadth of coins, think of it as like, you know, every single equity, all of them will have their option market. It's going to get a lot bigger. You're seeing like a lot of demand for very emerging coin, both protection on the downside and leverage speculative.
Speculative for the
So this is, I can tell you 5 coins, but really what people want is 500.
Sure. Benoit, Darius, Patrick, thank you guys very much. Audience, thank you guys. Please check these guys out, what they talked about, and we'll see you at the conference. Thank you.